Welcome to today's EESI podcast. Our subject is HSAs, health savings accounts. If you're an employer, you know the importance of healthcare benefits in attracting and retaining your best employees. And you also know that healthcare plan costs have been rising every year. In the past few years, high deductible health plans, HDHPs, have become more popular in an effort to keep those costs down. And HSAs, health savings accounts, have arisen to help employers and employees deal with the high deductibles themselves. HSAs are an important trend in employee benefits, and our special guest today, Comedy CE's Eric Johnson, is an expert in this field and will spend the next few minutes explaining the HSA, how it works, and why it is so advantageous for small and medium-sized companies. And at the end of today's podcast with Eric, we'll provide you a free HSA checklist download that shows you in layman's terms how to make an HSA option part of your company's benefit lineup. Eric Johnson is the founder of ComedyCE.com, a continuing education company designed to make learning fun. A recognized leader in the health insurance industry, Eric is a past president of the Fort Worth Association of Health Underwriters and a regular contributor to several industry publications. He is a frequent presenter at insurance and HR conferences nationwide. A Texas native, Eric was born and raised in Houston and currently lives in the Dallas-Fort Worth area. Welcome, Eric, and thanks for appearing on today's EESI podcast.
Well, thank you. I'm happy to be here.
Well, let's get right to it. Eric, explain to employers what an HSA is and how it works, how it's different than a traditional health benefit plan.
Sure. So when you think about a traditional plan, that could be an HMO or a PPO. It's a network-based product. With an HMO, you have to choose a primary doctor and get a referral to see a specialist. With a PPO, you don't have to get referrals, but you still need to stay in the provider network to get the best cost. But those plans, whether it's an HMO or a PPO, the traditional ones are characterized by upfront co-payments. So when you go to the doctor, you might pay $25. When you go to a specialist, you might pay $40. Prescription drugs are typically going to be categorized, as generic, name brand, non-formulary. We're actually seeing those drug tiers expanded, and a lot of plans now have up to 6 tiers, but you're paying a co-payment or a co-insurance prior to the deductible for those types of services. With an HSA qualified plan, it's still an HMO or PPO. So you can have HMO, HSA qualified plans as well as PPO, HSA qualified plans. The biggest difference, while they're called high deductible health plans, but the deductible is actually no higher than the other plans that we're selling. The maximum out of pocket, it tends to be lower than other plans that are compliant with the Affordable Care Act. So the biggest difference between an HSA qualified plan and a traditional plan is that you cannot have co-payments prior to the deductible. So preventive care is going to be covered at no cost. All other services, you're going to pay the contracted price, whatever the insurance company has negotiated with the provider, and that amount applies toward the calendar year deductible. If you have a plan like that, and you don't have other coverage that would pay prior to the deductible, so you don't have an FSA, or you're not covered under your spouse's plan that has co-payments or something like that, you don't have Medicare, then you can set up a health savings account, which is a tax-advantaged account. Both employers and employees can contribute to it, and that money, it rolls over from year to year, so it's not a use it or lose it type account, and it can be used for qualified medical expenses. So some of the expenses that would have been covered by a co-payment previously, but also for other expenses not covered by the health plan, things like dental and vision and so forth.
What do you think are the 3 most important advantages about HSAs for employers?
I think there are a lot of advantages. I think the one that most employers are initially attracted to is that HSAs offer a premium savings over a traditional copay plan, and the ability for the employees to save on taxes as well by making pre-tax contributions. So I think that's going to be at least the initial selling point of a health savings account for an employer, that they can actually save some money and their employees can save some money at the same time. I think a second big benefit, though, of HSAs is that it actually increases the ROI for employers. And I know that's not something that is immediately obvious because, when you take away those upfront co-payments that employees have kind of grown used to over time, a lot of times, the employer is worried about how they're going to react. And certainly with if the communication about the reason for the move and the advantages to the employees, if that's not clear, then they may not, react real well. But with some education, the reality is that HSAs not only help the employees save some money, but it also kind of gives them more control over their healthcare expenses. And over time, once they become used to it, a lot of most people really do not want to go back from an HSA to a traditional copay plan. They end up liking the plan more over time. And so I kind of, define return on investment as, how much bang do you get for your buck? So, with an HSA, the employer certainly is reducing the bucks. They're saving some money on the premium, but they're also increasing the bang, if you will, because the employees actually like it more. So overall, it does help the employer, increase the return on investment, which is the reason they're offering benefits in the first place. And I would say the third real advantage of an HSA versus some of the other plan designs out there is that they're simpler. With an HSA, you have upfront preventive care covered at no cost. Everything else, though, is subject to the calendar year deductible after that. Some plans cover everything at 100% in network. Some may have a co-insurance percentage, but there's fewer moving parts. And so it's a lot easier for an employer at renewal time to kind of shop around and compare their options because they're not having to compare all the different co-payments, for doctor visits and prescriptions and so forth. And so it just makes it for a nicer, simpler comparison, and it makes it easier to explain to employees once it's in place and they're used to it.
How much can employers save with an HSA?
So the percentage is going to vary from one insurance company to another and from one area to another. So it's really hard to say. I mean, sometimes it's a small 4 or 5% savings. You may see up to 10% versus a comparable copay plan. But I think if you ask people in the insurance industry, insurance agents, what the savings is compared to a copay plan, a lot of times the answer is going to be not enough, and employers will sometimes have that same reaction that there should be a bigger spread between a HSA type plan without those upfront co-payments and then a traditional plan that does have co-payments for doctors and prescriptions. That said, it is enough, in my opinion. If you do the math on it and you look at not only the premium savings, but the tax savings that comes along with it, the fact that everything in network counts toward the deductible on the HSA plan, so you truly know what your out-of-pocket exposure is, most people actually do end up doing better. Low utilizers, they're not taking a lot of advantage of the benefits anyway. They really just need catastrophic coverage. So with an HSA, they're able to save on premium, and they still get the same overall catastrophic protection. And if they actually set that money aside in that health savings account, then they actually will have that money in future years when they need it, or they can use it for other eligible expenses that aren't covered under the health plan. So they appreciate that. At the high end of the spectrum, you've got high utilizers that they might be hitting their deductible and out-of-pocket maximum every year. So with an HSA, it gives them that same protection, but again, they can pay with tax-free dollars and they're going to pay a lower premium. And for those people in the middle that use some of their health benefits but probably are not hitting their calendar year deductible, usually the premium and tax savings combined does make an advantage for them as well. And I guess the last point I would make on that is while the percentage spread may not be as much as what a lot of people would like to see, that spread is going to remain the same across all ages. And since older employees are charged more than younger employees, and older individuals are charged more than younger individuals, what that means is the dollar spread between an HSA and a copay plan for older workers or older individuals, a lot of times it's going to make more sense from a math standpoint.
How does an employer benefit tax-wise when employees contribute to the plan?
So obviously, I mean, the benefit to the employee is going to be obvious because they're going to be paying less in taxes. It's almost like putting money into a 401k.
Right.
From an employer standpoint, though, anything the employer contributes to the HSA is going to be tax deductible, just like any other benefit. But anything the employees contribute through payroll on a pre-tax basis, it actually saves the employer money as well because it lowers their payroll taxes. They're not having to pay the FICA and FUTA taxes on the money that the employees contribute. So
Okay.
employers save, but employees save as well.
Let's talk about the employees as better consumers. So what are some of the ways that employees are able to become better consumers? There's a whole range of tools now that help employees navigate healthcare.
What I have said is that you can't give people the responsibility to shop around for their health care without also giving them some tools to do it. And fortunately, we're actually seeing a lot of those tools developed, as you said. We're seeing price and quality transparency tools so that people can easily compare prices on prescription drugs, for instance, and see that, not only does it make sense maybe to switch from a name brand to a generic drug, but it might also make sense to, look at other pharmacies because they don't all contract at the same price. It's a little harder to compare prices for other services, doctor visits, and, expensive tests like MRIs, but those tools are getting better. There are advocacy services out there now that have a pretty good database of prices in the market. And if an employer offers one of those services, an employee might be able to call them, tell them what procedure they have coming up, and in network, that advocate can look for some of the contracted prices and direct them toward lower cost providers. We also see, wellness apps that allow people to compare nutritional content in the foods that they eat. When people start using tools to shop for their health care, they actually also tend to embrace tools that help improve their health as well. So the health savings account and the fact that not everything is covered by a fixed dollar copayment, that they're going to have some skin in the game and have to spend some of their own money, it incentivizes consumers to actually start shopping around, and when they do, there seems to be some momentum behind it, and they tend to use more of the tools.
Okay.
One of the other big ones, that I should definitely mention, and we're starting to see this more in built into health plans, but they're also available on a standalone basis, is these telehealth programs where people can pick up the phone and call a doctor and pay either a fixed amount or sometimes no cost at all, and if necessary, even get a prescription. So those pair really well with HSAs and help to replace the missing copay.
Is there anything that we haven't covered that you'd like to cover that might be helpful to employers?
I think the thing that I would say is that years ago, back before the Affordable Care Act, people were adopting HSAs sort of on a proactive basis. They kind of saw that if we can build better consumers, then that has the potential to lower healthcare costs and lower utilization and so forth. We're to a point now, though, premiums have gone up so much that a lot of employers have kind of been forced into these sorts of plans, whether they like it or not. These are the plans that fit within their budget. So what I would say is if you're having to offer higher deductible plans anyway, it certainly makes sense to also offer some tools, even tools outside the health plan, and put some more time into the benefits education so that the employees understand and appreciate their benefits and are actually using them appropriately. I think this is the way the market is going. So, some employers are still trying to cling to the old types of plans, but we're seeing more and more move to these plans. And as more move, the tools will continue to get better and better, and they're just going to become commonplace. So I would say be open-minded about it if you're an employer, and don't be scared of at least offering an HSA plan as an option.
Well, thank you, Eric. We appreciate your time.
Thank you very much, Lou. Have a good day.
If you'd like to consider adding an HSA option to your company's employee benefits package, we've created a simple checklist that will walk you through the process chronologically in layman's terms. To get your free copy, simply click the Click for Free Download button or link at the bottom of the page where you are listening to this podcast, or call us at 210-495-1171. That's 210-495-1171, and ask for a benefits specialist and for the free HSA checklist too. They'll email it to you and answer your questions. Again, that number is 210-495-1171. Thanks for listening to this EESI podcast. At EESI, our mission is to simplify business.